Hello students, in my previous video I had explained you the own source of long-term financing. In this video I will explain you which are the borrowed sources for long-term financing. The first borrowed source is debenture. Now what is debenture? It is a borrowing from the investor, or it is a loan which we are going to raise from the investors for longer period of time, which becomes a part of fixed capital for the organization. So debenture is a Latin word debere, which means to borrow or to take loan. Debentures are defined as written instruments of debt that companies issue under its common seal. So the investors are going to get the loan certificate from the organization after their investment in the form of debentures. Now debentures are issued as the loan by the government and the companies, and when these loans are issued, the investors are given the fixed interest depending upon the reputation and the growth of the organization. Now we are going to study what are the features of debenture. The first feature is debentures have got fixed interest rate. That means at the time of issuing of debentures, company decide how much percentage of returns in the form of interest is to be given to debenture holders. So every year, whatever financial condition of the company may be, debenture holders are going to get that fixed percentage of interest from the organization. The second feature is maturity. Now, when we issue debentures, at that time itself, the time duration of the repayment of the debenture is decided. For example, if we issue debentures for 5 years, so at the end of 5th year, we need to repay the capital amount which is invested in the form of debentures. So, debentures have fixed maturity period. Next feature is they don't carry any voting rights. As we have previously seen in case of equity shares, equity shareholders are the real owners of the organization and they have voting rights. But in case of debentures, they don't carry any voting rights. So they cannot interfere in working of management or they cannot attend the annual general meeting. Next feature of debenture, they have the collateral security. When we issue debentures, we need to provide some collateral security in the form of asset. So they get the security for their investment. So these are the features of debentures. Then we are going to focus on the types of debentures. So the first type is secured and unsecured debenture. So depending upon the security provided in the form of assets, debentures are divided as secured and unsecured debenture. So secured debenture gets the security in the form of assets from the organization at the time of issuing of debentures. So at the time of winding up of organization, they can claim on the asset, they can sell that asset in the market and they can recover their principal amount from the organization. But in case of unsecured debentures, if you are issuing unsecured debentures, you need not to provide any kind of security to debenture holders. The second type is redeemable and irredeemable debentures. So redeemable debentures means these debentures have got fixed maturity period. That means after the fixed duration, the capital amount in the form of debentures which is issued, it is to be redeemed back. It is to be given back to the debenture holders. But in case of irredeemable debentures, there is no maturity period. The debenture investment is going to continue with the organization in the form of investment till the organization exists. The next type of debentures are bearer and registered debentures. Now we all are aware about bearer check and cross check. It is similar to that. bearer debentures, that means the interest would be given to the individual who is going to produce the loan certificate or the coupon to the organization. But in case of registered debentures, only the debenture holders whose names are registered in the account books of the organization, only these debenture holders are going to get the interest from the organization. Next are convertible and non-convertible debentures. Now convertible debentures are those debentures which has got an option to convert their debentures in the form of equity, but non-convertible debentures don't have any option to convert in form of equity shares. And the last type of debenture is first and second debentures. Now, as we all know, debenture holders get the priority over preference shares and equity to get the returns as well as the principal amount. But in debentures also, there are first and second debentures. So first debentures get the priority over second debentures to get the benefit from the organization, and that is why the classification is first and second debentures. Now we are going to see what are the advantages and disadvantages of debentures issuing. So we will focus upon the advantage to the company. The first advantage is debentures provide long-term funds to a company. As I already told you, it's one of the sources to raise the finance for longer period of time. Next is rate of interest payable on debenture is lower in comparison to rate of dividend that we pay to our shareholders. Okay. See, at the beginning itself, we are going to fix the percentage of returns that are to be given to the debenture holders, which is generally lower in comparison to the dividend which is paid to the shareholders, because equity shareholders don't carry fixed percentage of return. So whatever is remaining with the organization in the form of profit, that all belongs to the shareholder. That is why the interest payable amount in case of debenture holder is low, and that is the beneficial point for the organization. The third advantage is interest on debenture is tax deductible. Very important advantage to the company is whatever returns in the form of interest that is paid to debenture holders, that amount we are going to deduct from the taxable income of the organization, and on remaining amount we have to pay the tax, and that provides a benefit to the organization. Next is debt financing does not result in dilution of control, because debenture holders don't carry any kind of voting rights. They are not owners of the organization, so they cannot control the working of the organization, which is again advantageous to the company. Next is a company can trade on equity by mixing debenture in its capital structure. See, what is trading on equity? When we design our capital structure, at that time we can have more fixed interest bearing securities in the capital structure. Now, the examples of fixed interest bearing securities are preference shares, debentures, term loans. Fixed interest bearing securities are the security which get a fixed percentage of returns from the organization every year. So, in capital structure, in comparison to equity shares, we can issue more of these securities, that is fixed interest bearing securities. So, what happens? As the company grows, the company's profit also increases every year, but the fixed interest securities are going to get fixed percentage of return from the organization even if the company's profit is increasing. So whatever surplus amount is left with the organization in the form of profit, that all belongs to the equity shareholders, and this is how we can benefit equity shares by having debentures in the capital structure. And as the earnings for equity share increase, it results into increased EPS, that is earning per share. The next advantage to company is many company prefer issue of debentures because it has got fixed rate of interest attached to them irrespective of the changes in price levels. As I already explained you, whatever market conditions are, whatever company's financial position is, you need to give the fixed percentage of returns to the debenture holders, and that is again advantage to the company. Next is debenture provide flexibility in capital structure of the company. The reason for that is debentures are redeemable in nature. That means you can redeem the principal amount back as and when required. If you don't want to have the debentures in the capital structure, or if you have excess of capital with the organization, that can be reduced by redeeming back the debenture amount. So these are the advantages to the company. Now, advantages to investors. The first advantage is debentures provide a fixed, regular, and stable source of income to the investors. Now, those who want to play safe, those who don't want to take the risk, this is the best security to invest, because debentures are going to provide the fixed returns to the investors, and it is going to provide the returns on regular basis, because organization has to pay interest regularly to the debenture holders, and a fixed amount is to be given every year, so that is going to benefit the investors. The next advantage is it is comparatively safer investment, because debenture holders have specific or floating charge on all the assets, and they enjoy the status of superior creditor in the event of liquidation. Already I explained you the point. Debenture holders get the security from the organization, so they don't carry any risk. In case of liquidation also, they can claim on the asset of the organization, they can sell that asset in the market, and they can recover the capital amount from the organization which is invested in the form of debenture. And very importantly, they are the first ones to get the benefit from the organization over the shareholders. The next advantage is many investors prefer debentures because of definite maturity period. That means it has got the maturity period which is fixed for particular duration. Say 5 years, 2 years, 4 years, 3 years, so whatever time duration you have fixed for redeeming the debentures, after that time duration you have to return the capital amount back to these investors. The next advantage is interest of debenture holder is protected by various provisions of debenture trust deed and the guidelines issued by SEBI. That means when we issue debentures, we are going to sign a contract with company and the investor. So this is the way how debenture holders can protect their rights. Okay, so debenture trust is there which looks after the security of debenture investment. At the same time, indenture is there. Indenture is a contract between debenture holders and the company, which again protects the interest of the debenture holders. So these are the advantage of issuing the debentures. Next, disadvantages. First disadvantage to the company is the fixed interest charges and repayment of principal amount is mandatory or it is obligatory. That means every year company has to give the fixed amount of interest to the debenture holder, whatever company's position may be. Whether company is in profit or loss, it does not matter. Still, the interest is to be paid every year to the debenture holder, and very importantly, repayment of principal amount at maturity is to be done. So that is an economic burden on the company. Next is charge on asset of the company and other protective measures provided to investors. Already as I told you, when you issue debentures in the form of long-term financing, you have to provide the collateral security to these people, which is a disadvantage from company's point of view. Next is use of debt financing usually increases the risk perception of investors. Very importantly, if you increase the amount of debenture in capital structure, that is going to increase the financial risk of the company, because as I told you, it creates the economic burden on the company. That means every year company has to pay the interest whatever company's condition may be, and that may result into liquidation of the company. That is, it increases the financial risk of the company market. Next disadvantage is company whose expected future earnings are not stable or who deals in products with highly elastic demand it is difficult for such company to raise more in the form of debentures, because if your income is not stable, it is difficult for the organization to pay interest to debenture holders every year. So these people cannot raise in the form of debentures. Next, we are going to see disadvantage to the investors. The first is they don't carry any voting rights, as in case of equity. So they are not the owners, they cannot participate in working of management, they cannot make any alteration in the management policy. Next is debenture holders are merely creditors and they are not the owners. Already I told you they cannot claim on extra assets or extra profit which company earns. That means they are just going to get the fixed interest and their principal amount, but they are not going to get extra assets or extra profit from the organization. Interest on debenture is fully taxable. Now this is the advantage to the company but a disadvantage to the investors. Okay, now in case of company, the interest amount which is paid to debenture holders, they can deduct it from their taxable income, but the debenture holders have to pay tax on the interest which they are going to get from the company, because it is considered as the source of income to the investor. So they have to pay the interest on they have to pay the tax on this amount. The prices of debenture in market fluctuate with changes in interest rate. That means the prices of debenture are not constant, depending upon the market fluctuation, whether the market conditions are good or bad. Depending upon that, there would be fluctuation in the prices of debenture. That means the prices are going to either rise or they are going to fall down depending upon the market conditions. So there is no stability for the prices of debentures. And very importantly, uncertainty about redemption also restrict certain investors from investing in such securities. See, even if it has got fixed maturity period, but if company feels that there is no need to have capital in the organization anymore, they are going to redeem the principal amount before its maturity period, or if the company is in need, it may continue investment even after the maturity period has arise. So there is no surety about the redemption of the capital amount. So we are finished with first borrowed source, that is debenture. Next we are going to see term loans. As we all know, loan is nothing but the lump sum amount which we get from the banks or from the financial institution. So as we can see, term loan is a medium term source financed primarily by banks and financial institutions. See, depending upon the time duration for which we raise the loan, term loans are divided as short term, medium term and long term loans. Short term loan are generally raised for one financial year. If we are going to raise the money from 1 to 5 years, it is categorized as medium term loans, and if we are going to raise and invest the money in the form of loan for more than 5 to 20, 30, 40 years, it is categorized as long term loans. So such type of loan is generally used for financing एक्सपांशन एक्टिविटी. ओके, अगर आपको कंपनी एक्सपांड करनी है, इफ़ यू नीड टू डाइवर्सिफाई, इफ़ यू नीड टू मॉडर्नाइज योर प्रोजेक्ट, one of the best sources for financing your project is term loans. It is also known as project financing. Very importantly, term loans are repayable in periodic installment. मतलब you have to redeem the amount in installment to the loans, to the banks or to the financial institution from where you have raised the loans. Now, what are the features? The first feature is term loans gets the security from the organization. It is similar to debentures. When we issue term loan, we have to give some of our asset in the form of collateral security. Next feature is obligation. That means company has to mandatorily pay the interest to the institutions or the banks from where they have taken or from where they have issued the loan. Okay, next is, as I already explained you, interest is to be paid on regular basis and you have to compulsorily make the installment payment depending upon the terms and condition. It may be quarterly, it may be 6 monthly or it may be annually, but that is to be paid on regular basis. Next, it has got fixed maturity period. As I have told you, depending upon the need, you can raise in the form of short term, long term, and medium term loans. So it has got a maturity period. After maturity period, capital amount is to be redeemed back. Next very important feature is restrictive covenants. Now what is restrictive covenant? It is one of the method to secure or to protect your investment. Now the banks or the financial institutions which provide the money in the form of term loan, they are going to put certain conditions in front of organization in the form of restrictive covenants. That means they can limit the organization to raise the capital in the form of debenture or any other sources which is going to increase the financial risk of the organization, and this is the way they are going to protect their own interest. Because जितना ज़्यादा आप रिस्क फाइनेंशियल रिस्क बढ़ाओगे उतने ही कंपनी के लिक्विडेट होने के चांसेस बढ़ते हैं, बिकॉज ऑफ विच इवन योर इन्वेस्टमेंट may have the problem, or sometimes you may not get your returns. So these institutions are going to put certain conditions in front of the organizations which are known as restrictive covenants. And the last feature is convertibility. Now convertibility is an option where the term loan holders get an option to convert their term loans in the form of equity shares, and they can become the owners of the organization. Now we are going to see what are the advantages and disadvantage. Now the first advantage to the borrower, that means those who are going to borrow the loan from the institution. First, it is very cheap and easiest source to raise the capital. Next is the borrower is going to get the tax benefit, because the interest which is paid to these people or these institutions from where you have raised the loan, on the interest which is paid to these people is tax deductible. Again, as I told you or explained you in form of debentures, whatever amount is paid in the form of interest, that amount you can deduct from the taxable income, and on remaining amount you have to pay the tax. So that is going to provide the benefit to the borrower. Next is flexibility. That means depending upon the terms and depending upon the borrower and the lenders, there can be certain flexibility. You can make the changes between the borrower and lender while signing the contract or while issuing the term loan. Then these people, that means the financial institutions or banks, don't carry any voting rights even if they invest in the organization. So they cannot control or they cannot interfere in working of management, which is advantage to the organization or the borrower. Now the advantages to the lender is term loans are secured. As I already explained you, they get the collateral security for the investment. They are going to get the regular income in the form of interest. Every year they are going to get the interest from the organization. And next is conversion. That means they get an option to convert their term loans in the form of equity. Disadvantage to the borrower. First is obligation. As I told you, it is obligatory or it is mandatory to pay the installment, to pay the interest to the lender every year, whatever company's financial position may be. Next is it increases the risk of liquidation, because if the company is not able to pay the installment, or if it is company fails to pay the interest, the lenders can sell the assets and they can recover their amount from the organization. So that increases the financial risk of the organization. And generally lender puts the restrictive covenant, which I already explained you, the conditions in front of the borrower, which limits the working of the organization. Now disadvantages to the lender. First is negotiability. Now term loans are negotiable in nature. That means changes can be made as and when required, which is a risk or which is a disadvantage to the lender. And lender don't carry any voting rights, or they cannot control or they cannot interfere in working of the management. So these are the disadvantages to the lender. So we are finished with the borrowed source of financing for raising the long term capital. Thank you.